Hello to our brilliant, empowered investors from 189 countries worldwide. Today I've got quite a few things to share with you, so let's dive in. First of all, changes in household size. I probably don't need to point this out again, but households keep getting smaller and smaller and smaller. As marriage rates decline, fertility rates are through the floor. They are an absolute disaster in most areas of the Western world and some of the Eastern world as well. We see much smaller household sizes in the United States. And what does this mean? This means more housing demand. If you have fewer people per house, you obviously need more housing units for those people, right? Because they're just a much smaller household size. And as we look at this through the years, the chart I'm showing starts in the late 1940s, the post-World War II baby boom, of course. We saw household sizes max out into the early to maybe even mid-60s, and they've been declining and declining ever since. Well, why has that happened? Think of all the incredibly amazing things, and I don't mean this in a good way. I mean this in a way that had huge influences on society. You can choose whether it's good or bad. I say most of these things turned out to be bad news overall. But we had birth control, right? That changed the world. It was an absolute game changer for the world when the pill came out. We had the rise of second wave feminism. A woman needs a man like a fish needs a bicycle, Gloria Steinem said. And that just proliferated through colleges, reducing the birth rate of educated, mostly white people. And so we saw birth rates plummet because of that. And then we had the media frenzy that really just told the world they should be single, lonely, and childless. And so what'd we get? That's exactly what we got. We got massive spikes in depression rates, suicide rates, and it's just changed everything. But what does it mean to real estate? Well, it means smaller household sizes, and that means more demand for housing units. As I have mentioned many times on the show, think about being a government official back in maybe the late 1950s. I mean, this is sort of no particular exact time, right? It's just sort of the zeitgeist of the culture and of what economists were thinking and what taxing agencies were thinking, taxing authorities were thinking, not just in the US, but in many other places around the world. They were thinking, gosh, half of the population is not being taxed. We've got to increase tax revenue. How do we increase tax revenue? We got to get women out of the house where we can't count them economically, not directly, of course. Being a stay-at-home mom and being a good mother and keeping an eye on your kids is probably the most important thing ever in history, right? That's super important. So if we want to get more tax revenue, we've got to get women into the workforce. So that's what they did. And then think of being a CEO or a member of some board of directors or any higher up person in any consumer products company. Well, how do we sell more of our products? That's always the question, right? We want to sell more toasters. We want to sell more sofas. We want to sell more beds. We want to sell more of everything. How do we do that? Well, how do we sell more dining room tables? How do we sell more kitchen appliances? How do we sell more dishes and silverware and all of this stuff, right? We make them have two households rather than just one. We create two households where there was just one, because when you just have people sharing stuff, you have less demand for your products. And so we've got to discourage marriage and we've got to encourage divorce. So you saw the media frenzy of really the 70s, and I always point to the movie Kramer versus Kramer as a huge influence on this, but there were countless other movies and TV shows. There became like a whole industry of hey, we want to expand the wedding planning industry, so let's make weddings just super elaborate and expensive, get people to blow all their money when they could use all that money they spent on the wedding to buy a house. And then we want to encourage divorce so we can sell more products. And you can just see how obvious this is, right? This is so obvious. And then if you want to get even more diabolical about the whole thing, we want to take those kids away from that mother and we want to put them in brainwashing institutions known as public schools. So all of this contributes to a smaller household size and the need for more houses. And by the way, I should also mention apartment developers, home builders, all of them love this. They want a smaller household and they want to sell more housing units, right? So same thing goes for them. And then we see the percentage of households by type, and this is absolutely shocking. I mean, it is shocking that in the course of just a few decades, married households was at like 80%, and now it's below 50%. Like that is mind-boggling. And then the rise of non-family households, aka roommates or co-living arrangements, and then other family households. And I honestly don't know exactly what that means, but that has increased slightly. But the most staggering statistic here is the decline of married households. I mean, folks, many of you were alive at the time this stat starts, right? During the baby boom era. And now you saw married households decline from 80% to in the 40s, about 47%. I mean, that is absolutely shocking. Like, you really have to sit and ponder the massive, massive economic and cultural significance of the decline of marriage. It is truly, truly shocking. And then you had other things. You had LBJ, Lyndon Baines Johnson, who was an awful president. And I don't know, was he behind the assassination of his predecessor, Kennedy, right? The truth about that story has yet to be told. We all know the story has a million holes in it, and the government just won't tell the truth about it. But, Trump released a lot of those documents, but there was no smoking gun, so far as I know, because you can't get any media attention for this type of stuff because it's like everything has become a scam, everything has become a cover-up. And maybe it was always that way, and maybe we're just more aware of it nowadays. And so we complain about it more and we see it more, and maybe we're just more aware of it, right? But regardless, so he had the Great Society plan where the government would step in and be very involved in all of our lives. And so out of that, I don't know exactly what year it was, but somewhere in the 70s, I believe, don't quote me on that. But we saw aid to families with dependent children. And so that made a massive increase in fatherless homes where there was no father. They literally encouraged with money, with dollars, marriages to split up, right? Or to never happen, right? And we saw this, this massive destruction of the family unit. And so there are many factors, of course. These are very complex issues. You've got to peel back the layers of the onion. There are many, many layers, cultural and economic layers, and so forth. Okay, and then here's the rise of living alone. And here you see another staggering difference. You see about 13 million households, right, that were living alone, dates back to the 60s. And now we see basically almost half of all households are one person. Remember, every person needs their own coffee maker and needs their own sofa and needs their own living room chairs and needs their own dresser and needs their own bed and needs all their own stuff in their own house, right? All of these materials, if you are a consumer products company and you are selling into this trend, your business has massively increased. And if you're taxing into this trend, your tax revenue and the GDP has massively increased. But for us as real estate investors, it all ties in more housing demand. And as far as I can tell, these numbers are only going to get worse or better, depending on how you look at it, right? Economically, you can serve this audience, right? You can serve these people that need housing by letting them rent that housing from you, right? So that's the opportunity for you. And here's just another way to look at the decline in household size. And you see that we're at about 2.51 as of last year. And that might sound like, well, Jason, that's pretty good, actually. There's still a fair number of people per household. And not really. Think about it. You're considering roommates, co-living arrangements, multi-generational living, children, couples, like everything in there. Okay, this is a massive, massive decrease in people per household. So that just leads to more and more demand for rental housing that you as an investor can provide. Okay, so let's take a look at what has been going on the past year. The market is very muted. It is getting busier though. So in about a month, we're going to see some new stats, and we're going to see that there's definitely an uptick in real estate business. The mortgage rates came down, and that is definitely causing a small buying frenzy. And we're definitely seeing, like over here, we've definitely seen business improve. No question. The past 2 months has been much better than it has been the last couple of years. And so we're up about 2.2%. Again, nothing to write home about, nothing too exciting year over year in terms of prices. And, we've got to always remember, as this market is kind of muted, what choices do we really have as an investor? And I'm going to show you a chart. And for those listening on audio only, I will explain it to you because this is going to absolutely blow your mind. It is mind-boggling. So what choices do we have? Well, we can invest in the stock market. We can invest in a syndication or a fund. And so many of these syndicators and so many of these fund managers have not been discovered yet as the scam artists and criminals they are. Okay? Remember commandment number 3, thou shalt maintain control. That means be a direct investor. When you are not a direct investor and you violate my commandment number 3 of the 10 commandments of successful investing, you leave yourself susceptible to 3 major problems. Number 1, you might be investing with a crook. Number 2, you might be investing with an idiot. And number 3, assuming they're honest and competent, which those are big hurdles, they take a huge management fee off the top for managing the deal. And remember, the management fee is never what it says, ever, because they are in control of how they get to spend your money. Are they putting all sorts of things into the business? Are they using the money you invested in their syndication deal, in their fund that they're running? Are they using that money to basically pay for advertising to get new investors into their next deal? Are they using that money to wine and dine investors? Are they basically hiring contractors to work on their properties, and then that contractor got so much business from them that they're basically influence peddling, that they're doing the addition onto their home for free? But basically that's baked into the price of what they paid for in terms of building that apartment complex or remodeling that apartment complex or maintaining that apartment complex. They're getting all sorts of favoritism at your cost. And you just can't see this unless you were really, really to audit their books. And you would have to figure out, it's so complicated to do this, you would have to figure out what the reasonable price is. And did they get multiple bids? Did they select the lowest price bid? And they can come up with all sorts of reasons for their decisions. And they don't even have to, because they're protected in law by something called the business judgment rule. Look it up. I'm not an attorney, but you can look this up and you can learn about it. The business judgment rule basically gives these people that are essentially skimming all your money off of your return on investment that you should be getting. They've got wide latitude under the law to operate the syndication or the fund however they want to, okay? And so remember, they might be a crook, It took 35 years to discover that Bernie Madoff was a crook. Okay, a lot of these people that you think are reputable today, that are running some fund or some syndication and taking your money, they just haven't been exposed yet. And you know what? They may actually never be exposed. They may never get caught. Bernie Madoff, running his huge Ponzi scheme, may have never been caught. The lesson here is be a direct investor. Don't get ripped off by a crook. Don't lose money because you invested with someone who's basically incompetent. And there's a lot of very rich, very successful, very incompetent people. Believe me, I have met many of them. They are really no big deal, okay? They are really, really no big deal. And then the third problem is they take a giant management fee off the top. Now they're going to do that just in their percentage that they take. They're going to take a promoter fee. They're going to take an acquisition fee, a disposition fee. They're going to get all sorts of other little fees. They're going to have their own management company manage the deal, okay, and pay them with your money, whatever they want. So be a direct investor. Just buy some houses, okay? Buy some houses and hold on to them and ideally self-manage them. But if you don't want to self-manage them, use a property manager. At least with the property manager, it's way more transparent than it is with a Wall Street investment, a syndication, or a fund. You really know what's going on and you will be in control. And of course, the big story about that in the current news is Marco Santarelli. Now, I think the first hearing on his indictment is October 20th. So it's coming right up, it's right around the corner. And, he's been charged with bilking investors out of $62.5 million. He's known for Narada real estate investments or Narada capital management. Keep in mind, a lot of investors have approached me about him and they're accusing him of running a Ponzi scheme, okay? These investors are thinking now that the government has charged him with this crime, okay, and he could get like 20 years in prison, right? The government could lose their case. Like, you have to understand that the government doesn't always win. Just because they charge somebody, everybody has the right to a trial and they present evidence on both sides and a jury can decide or a judge can decide. Mostly it's a jury though. The government could lose their case, and a guy like this who ripped people off, right, according to the government, allegedly I should say, right, to the tune of almost $63 million, he could just walk scot-free, right? And guess what? He can probably use a lot of the money that the investors invested with him for his defense. I mean, who says he isn't using that money to hire forensic accountants to spin the case in his way? Who says that he isn't using that money for legal representation? I mean, folks, do not invest in syndications or funds to whatever extent possible. And the same with Wall Street, right? Unless you're sort of downshifting into neutral and you've made all your money, you're not going to get rich investing in somebody else's deal. You could get rich investing in your own deal. That's how people get rich. Invest in your own deal, not someone else's deal. Not some syndicator, not some fund manager. Just do your own thing. Be a direct investor, and for the bulk of your wealth, invest it in your own stuff. That's the lesson here. Commandment number 3. So this is an Orange County Register article. It's one investor, quote, "I have lost a lot of sleep and cried a lot of tears," said one alleged victim of private equity CEO Marco Santarelli. And that's Narada Real Estate Investments, probably how you know him, but he had another company, Narada Capital Management. And then one of the reviews that came on, his podcast is still running. Okay, investors are still looking at investing with this guy, I guess. Here's a 1-star review. This is from Sullivan M., located here in the US. 1-star, criminally indicted. Beware, Marco has now been criminally indicted by feds for a $90 million Ponzi scheme. Now, I don't know where he gets his 90 million, and the Orange County Register article says 62.5 million. But either way, a lot of investors have lost a lot of money here. So commandment number 3, thou shalt maintain control. Be a direct investor. So here is an example of return on investment. So for those of you listening on audio only, I am showing a chart of the last 10 years, and this data is from the Fred website, okay? St. Louis Federal Reserve website, Fred, and it shows the S&P, which has had a phenomenal run, by the way. Stocks have been great, gold has been great, and houses have been great. And here's what they say. They say the S&P has been the best thing going. Over the last 10 years, it returned 195%. 195%. So you've almost doubled your money. Gold, which has been doing great lately, gold has been a rather sleepy asset over the decades, right? It's sort of not done that much, right? But gold doing well lately, 117%. And the worst of the bunch they show you on this chart, but I'm going to prove them wrong in a minute. Hang on. But wait, there's more. The worst of the bunch is single family homes, because the median home price over the last 10 years has only increased by a measly 93%. Okay? A measly 93%. Not as good, according to this chart, as gold or the S&P. But are they really telling you the full story? Remember, always ask yourself about the dogs that don't bark. Always ask yourself, whenever someone presents anything to you, they present a chart, an article, they just say something, they're on stage teaching you something and maybe misleading you. Always ask yourself the question, what are they not telling me? What is the article not telling me? What is the speaker not telling me? What is the chart not telling me? You can't hear the dogs that don't bark. And also always ask yourself, compared to what? The Jason Hartman question, as you've labeled it, compared to what? Life's most important question. Those two things, the dogs that don't bark and compared to what, are really, really intellectually important concepts. So let's now look at this chart calculated correctly. I have corrected the chart. Again, it says the S&P was the winner at 195% return over the last 10 years, gold at 117%, median home price 93%. But most people use leverage when they buy the home. And if they just use very conservative leverage and they put 20% down, not 10% down, not 5% down, not a VA loan with nothing down, or an FHA loan with, 3.5% down, right? They basically put down 20%, a very, very conservative type of number here, right? That turns that 93% return into a 465% return, conservatively leveraged. And remember, that doesn't include positive cash flow if it's a rental property. It doesn't include tax benefits, doesn't include mortgage paydown, and you know what it doesn't include mostly? Inflation-induced debt destruction. Yeah, that's the secret wealth creator, trademarked by me, inflation-induced debt destruction, that I've been teaching for 21 years. It's not even shown here. All we're talking about is simple return on investment based on 20% down, very conservative, not over leveraged. If you put 10% down, this return would be it's already through the roof, but it'd be through the atmosphere, okay? And if you put 5% down, it would be insane. It would be, go to Neptune, okay? So again, the media will mislead you because the media is part of the vast Wall Street conspiracy. They want you to invest in stocks, assets that are the low-hanging fruit for the government to grab and tax and control and really see easily. And real estate is never really considered an investment like the Wall Street crowd is. It's just not fair how that's characterized. But again, it far outpaces the return of the S&P or gold or almost anything else pretty much, right? Now, you could have had a couple of years where you made more in Bitcoin. Okay, but here's the problem. Here is the problem. You must read Morgan Housel's book, The Psychology of Money. It's a great book. And what he talks about in that book is how investors, and he's mostly a stock market guy, right? But what he talks about is how investors can never control their emotions during the down cycles. So they always sort of buy psychologically when things are peaking and they sell when things are down. And that's the problem. Real estate, though, because it's less liquid, it forces discipline upon you. It makes it a much better investment. It's harder to access the equity and spend it and blow it. And it's not very tradable. You can't trade it with a click of a mouse like you can a stock. And so it forces you to be a more prudent, long-term, Warren Buffett style value investor because it's not very liquid. And that is the benefit, not the drawback. It is the benefit of income property, the most historically proven asset class in the entire world for literally thousands of years. Okay? Nothing else is like it. Nothing else is like it. So I want to close today with this great quote that I read when I was 17 years old. And it's from William Shakespeare. It goes, "There is a tide in the affairs of men, which taken at the flood leads to fortune. Omitted, all the voyage of their life is bound in shallows and in miseries. On such a full sea are we now afloat, and we must take the current when it serves or lose our ventures." The opportunity is here. I'm not going to say it's the best time ever to invest in real estate. It's not. Okay? You could have bought as much property as you could have at the beginning of COVID and sold at the sort of unofficial end of COVID, and you would have made an absolute fortune, right? You could have done that in 2008 and, sold around, I don't know, it depends, if you wanted to shorten the time, right? You could have sold in 2013, for example, and made a ton of money, okay? There are always cycles to everything. But folks, you can't win if you don't get in the game. And if you're in the game, consider expanding the game so you can win big. Anyway, reach out to us. Our investment counselors are here to help you. We have properties all over the country in a whole bunch of different markets. Empowered Investor is here to empower you with free investment counseling. Reach out to our investment counselors at 1-800-HARTMAN or 714-820-4200. Press extension 2 on either of those. You'll get one of our investment counselors, and they will help you do a portfolio makeover or a portfolio review and figure out the best way to maximize your return on money. We have great properties that we can help you buy through the providers that we've established and we've vetted, and we are constantly telling them to be conservative in their projections. You can find these properties at jasonhartman.com. Just click on the properties page and you can see the full performance there. By the way, we have been working on these performance. So if you've been investing with me for the last 21 years, for example, take a look right now at jasonhartman.com/properties, or just click on the properties button at jasonhartman.com and see the updates to our property software. You're going to love them. And soon we are going to institute those same updates into Property Tracker. That's the other software company that I own that basically helps you analyze real estate deals. You can go get a free account at propertytracker.com. All of the updates from the new Performa are not there yet. They're only on the shopping site at jasonhartman.com right now, but soon they'll all be on Property Tracker. We've got rent to value ratio. We've got a whole bunch of other great things we've modified. We've really kind of worked through this Performa and just made it more intuitive and easier to understand. One of the best things I ever did 21 years ago when I started being a nationwide investor is I standardized the data. And I've done that ever since with the same exact tool, Property Tracker, or these Performas, this one-page Performa. So you can easily analyze deals, you don't have to be a detective, and you're much less likely to miss things when you standardize your data. Very, very important. Anyway, please reach out to us. We can help you. We really wish you a lot of success in your journey. Happy investing.